Yeah, there's lots to go on the downside, plenty more to go on the downside. We've got a lot more money to make, even though it's already dropped a lot. Hi, Courtney Smith here with your weekly video newsletter, TradeSmith. And you can see I've got a long-term chart of the bonds on here. This is the ETF TLT, and it shows every bar is 1 week. And you can see it goes back 5 years, 5.5 years to be exact. And there's a lot of squiggles on that chart. So let me break them down to you. Obviously, the chart, the red and black, that's the actual price action of the TLT. And you can see that we put in a major top. Or is it a major top? Well, let's break it down. So the chart just collapsed, just plunge-o-rama over the last month. Now, a couple of things. Let's break it down. First of all, it's actually just a major correction in a major bull market. Now you can see a horizontal green line. If we break below that green line, then I would believe that we're in a major bear market. But there's still 8 points to go on the downside before we even get to that line. So as a result, if you're trading futures, that's an $8,000 profit. If you're trading TLT, that's $8 a share. That's not a bad move. If you're trading options, of course, it's a big winner. So right now, we just want to get some perspective here. But since the market has been collapsing as much as it has, in as fast as it is, the momentum is on the downside. And so I do think we're going to get down to that green horizontal line. Now, another reason for expecting a bottom down there is the slanted green line. Now, the slanted green line is just a trend line from those old lows. Now, I'm not a big believer in trend lines, but when I see the trend line and the horizontal line at basically the same price, that gives me a lot of confidence that it's going to be hard for this market to go much below that. But if it does go below that, oh, Katie, bar the door, this thing's going way, way down. Now, fundamentally, the market is going higher for several reasons. Number one isn't big expectation of higher inflation down the road. We're seeing inflation expectations of going, instead of like 1%, we're now starting to see 1.5% or 2%. Now, that doesn't sound a lot, but this is a 10-year Treasury note, so that extra 1% gets compounded over a 10-year period, and therefore it becomes a big number at the end of 10 years. So the market has to collapse a lot in order to compensate for that higher inflation. In addition, the Fed is expected to raise interest rates in December, and so a 10-year Treasury note, another way of thinking of a 10-year Treasury note is that it is 40 90-day T-bills. So if T-bill interest rates are going up, then this is a 10-year Treasury note is the cumulative effect of 40 of those. So once again, compounding comes into play and causes the interest rates to move higher. So on top of all of that, China is dumping tens of billions of dollars of U.S. Treasuries every month right now. So that's the fundamental side. Let's look at the technical side, starting at the top. I showed you the two big lines. Now let me talk about the arrows. Up at the top, you see my top green arrow is pointed at the purple predictor. Well, the purple predictor was running along pretty parallel with the price action of the bonds. But lately, it's lagging. Now, it's still going down, but it's not going down as much. So I interpret that as somewhat bullish because the purple predictor tends to be a leading indicator of price action when there's a divergence. So I guess my best scenario is, one other factor. Let's take a look at the second green arrow. The second green arrow is the RSI, and it's almost down to 30. You can see it's just barely above that green, that little thin green line, which is 30. We'll go back over the last 5.5 years. It's never got there. So normally on a weekly chart like this, you would expect that if it gets down around 30, you start to look for reasons for the bear market to be over. So if I combine the purple predictor, which is kind of holding back the decline, I look at those two, the trend line and the horizontal line, and then I look at the RSI. Well, technically, it looks like we can plunge another 3, 4, 5, even 8 points to the downside, but we're starting to see the factors come into play to stop the bear market in bonds. Now, down at the bottom, I've got a red arrow showing the incredibly high volume on the plunge-o-rama, and that still remains a bearish factor. So right now, got to be short bonds, but we're closer to the end of this bear market than we are at the beginning. And so the next big move might be up. We need to monitor what happens from now over the next, say, month, because I think it'll probably take several weeks at least before we bottom out these, and then we'll see where we are at that point. So stay short. I probably wouldn't get short right now unless you're a real short-term player, but there's still lots more money to be made here. All right, everybody, thanks very much. Welcome to our TradeSmith, bringing the hammer to the markets for over 45 years. Not TradeSmith, me, okay? Me, not TradeSmith. TradeSmith is not that old. All right, obviously, this disclaimer feels like it's really, really old, so check it out. All right, S&P 500. Let's break down where we are in the stock market. All of the factors we talked about last week are still in play. Now, I thought that we would struggle up at these old highs. We struggled for just a couple of days and then broke out on Friday. Now, remember that Thanksgiving week is a bullish seasonal week, and Thanksgiving is now over. And we often get a little dip in the first 2 weeks of December. I'll show that to you in the seasonality. We're also up around 70 on the RSI. That's the red arrow. But finally, the purple predictor broke out to the upside. I put a green arrow saying it's bullish. Well, it's only bullish because it's really not that bullish. It's bullish compared to last week because at least we're making higher highs, but it's still lagging so much. It shows the smart money's not in this market on the long side. All right, Dow Jones, similar picture, but notice how much stronger the purple predictor is. So this is where we want to be, old style companies. We're going old school here, and we want to be in industrials and metals and cyclicals and really old-fashioned boring stocks. We don't want to be in technology or those kinds of sexy stocks. We want to be bored out of our minds. But the boredom is where the price action is, and our job is to make money. We don't care. Hey, if we're getting bored and making money, that's okay. That's okay. We're not here for the excitement. Now, you can see here's the NASDAQ. Also, well, pretty much the same story. All right, seasonality, our seasonality indicator, turned bullish almost 3 weeks ago. Solidly bullish. You should be playing the long side with extra large positions right now. Extra large positions. So all of these winning trades that we've been highlighting for you and winning sectors and winning ideas, they're double or at least 50% larger size. So factor that in when you're factoring in your profitability. Seasonality, you can see that I'm still using the blue line as our preferred, and you can see we're almost to December and a little bit of a dip in early December. The first couple of weeks seems like a very reasonable thing to do after the big rally we've had, but then notice starting in the middle of the month, we should be expecting nothing but clear sailing towards the end of the month. All right, the yield curve is still providing a cap on how much money we can make. Unfortunately, we're going to have to wait until July of next year, and then you can see the yield curve really starts to turn positive, and the fourth quarter of next year, we're going to be crushing this market. Asset allocation, wildly bullish, okay? Wildly bullish. Did I mention it was really bullish? Our stock market risk indicator, also very bullish, although starting to run out of a little momentum. Still very, very bullish. Global shares, why bother? They're being weighed down by the strong dollar, which is having a big impact on them. Let's just leave them, except for the Greek market. Now, I told you, I jumped up and down. I told you if we break these highs, you got to get long. Greece is where it's at, man. Greece is where it's at. Well, the U.S. is where it's at. Greece is my second favorite market around. Okay, Japanese shares, I've been talking about these. This is DXJ. Been pounding on this one for months. Please, be long. I hope you're making a ton of money. Bonds, well, of course, we hammered on those. I don't think we need to go into it much longer. We covered that well, I think. Key factors, still the most important one is the blue line. That is the 10-year yield in Germany, and it's going up, just not as much as the 10-year in the U.S. is. Dollar, very, very strong, but notice I got a little red thing there. we might sell off this week. Look for some profit taking to come in this week. Not the end of the bull market by any means, but just some profit taking. Gold plunged again this week. Only a little bit of consolidation. Our fundamental, look, I'm short, and you've got to be short. And I know there's a ton of gold bugs who are on this call, and they're saying, but I'm losing money. Yeah, no kidding. And you're going to continue to lose money on gold. Get out of it. You can always rebuy it back later. Okay. So if you have gold for insurance purposes, that's different. But if you're trying to make money in gold, you got to be only making money from the short side. Now, our fundamental indicators turned a little bit more positive. We had 3 red arrows last week. We got 2 reds and 1 green here. Now, the green one is the CRB, and it's a leading indicator of inflation. Hence, the bonds are going to go down because the CRB is going up. Got how all these things are interrelated? Very cool. I told you last week we should be seeing a high in oil. We're seeing that high. Turns out we got this stupid rally on ideas that the OPEC was going to have another congregation where they were going to get together and they were all going to sing Kumbaya, and it was going to be a love fest, and they were going to cut production. It was going to be fantastic. I told you last week, no way. And Saudi Arabia came out and said, no way. This is it. Oil's going back to $40. All right, everybody. Wow, what great price action. The markets are moving exactly as predicted here in our TradeSmith. You've really got to be a paid-up subscriber to get the specific trade recommendations. Plus, we put in a ton more analysis as well. It's a peanut. Go to that website up at the top. Sign up right now. You're going to really enjoy it. I even think you might make $47 a month in profits. You might. You just might. Who knows? And certainly that means this will be a free newsletter for you. All right, everybody. We'll see you freebies next week. Fully paid up members, hang in there just 1 second.